Yo, what's up, everyone? It's your boy Looney, and today we're getting real. These are the 5 dangerous mistakes I see new investors making. Right now, the markets are bullish. There is no denying of that. We are seeing all-time highs from SPY and QQQ and other investments, but that's exactly when people start slipping. And if you're guilty of any of these, don't worry, I've also been there, and we're here to fix it. But before we get into it, I do want to do a quick shout out to the Discord. It is free to join. And then I also offer premium perks, which gives you access to one-on-one coaching. I do trade callouts. I have some premium chats. I do giveaways, and I have an option selling course. You can check it out. All links to that are in the description. But let's start with the first one, and that is buying too much at all-time highs. Look, I get it. Markets are green, hype is up, and FOMO is loud. But buying heavy at all-time highs, that's how people get wrecked when the market finally cools off. Now, it doesn't mean I'm not buying. I am still buying, but I'm definitely scaling down, and I'm doing my dollar cost averages, obviously, but also I'm not selling as much puts. You can see my cash I've been loading up on. I've been selling puts on Maro, and now I'm just letting them expire, and I'm not opening up new trades. And that's because I feel now's not the best time to go all in. We could even look at some hyped up stocks. Let's look up ASTS, great company, great stock. But again, I do feel like this already had its pump. It's up 100% in just the past month. Now, it doesn't mean you shouldn't buy into it, but I would be very careful with your risk allocation. Maybe put a little bit in or do it over a long period of time by DCAing, but I would not go all in. I would not put all your money into investment like this that shoots up 100%. And actually, that's a good example I'm going to bring up too. I did that with HIMS. So if you put all your money in at these all-time highs, recently it crashed due to that news of NVO leaving and just the whole thing going on. It ended up crashing 30%. And I didn't buy it then. I ended up waiting. Once that crash hit, I thought that was a great time to invest. And so far, it's been doing pretty well. I mean, in the week, it is down 22% because of that crash. But ever since then, it's up 15%. Now, if I FOMO'd in and I bought at tops like here, I would have got crushed. And if I went all in, I would even hurt even more. So instead, I just waited for things to play out, waited for a better opportunity, and now I own 5 shares. So not a big position. Again, not a big position because the overall market is a little too overbought because we are on such a bull run. And buying 5 shares gives me leeway. So if the stock drops more, I could possibly buy more shares. But also if it goes up, I'm not really missing out because I'm not trying to build this position right now and just build a big position right now. So buying too much at all-time highs is a constant mistake that new investors make. Now, number 2 is not taking profits. If you're up 50, 100%, and you just watch it bleed back down, that is a tough scenario. I do take profits. So if we look at my crypto, I am pretty much negative on a lot of them except for Bitcoin, but that's because I locked in the wins back when it was up, when they were up 100%, when Doge is up 100%. And even HOOD we could look at right now is an investment that I'm up pretty significantly since I first started. And I don't plan to take profits on this one just yet, just because I do want to build this position. I am trying to get 100 shares and just have it a big part of my portfolio. And if it does crash or drop significantly, I'm not too upset because I actually want to build this position. Now, that is a issue that people do. They ended up buying at highs and then they wait for the crash and then they panic sell. Now, if you get into investment like HOOD, you know this stock can drop pretty harshly. It dropped 40% back in early of 2025, dropped almost 50%. Pretty aggressively it dropped, and that is not the time to sell because ever since that went to $35, it is up 85%. So what I would have done if I would have started way back is to dollar cost average, and then up here, maybe taking profits, maybe not. And then when it finally crashed, start to aggressively invest a little bit more. And then once it started to pick up again, then you could cool off with your investing. And yes, there is that saying of you don't want to catch a falling knife. So what you could simply do is buy when you finally get that support. So maybe I would have bought right here at that 25th or maybe a little bit after, somewhere around here, late of February. And then again, when it dropped here, would have bought again here in March, and then it dropped again, and then finally see some support in March, and maybe here again in March. So you can't time these things perfectly, but that is a good strategy, is wait for some support. And yes, you do miss out on the perfect bottom, but trying to time everything is not good. And I actually did that with Riot. I bought a call and I waited for some kind of support to actually open up this call. I didn't buy it when it was at all-time lows. So if we look when I bought it, it was on the 6th of May. Is that right? Yeah, it could have been the 6th of May. So let's go here. Let's go to the 3-month chart and we look at May. Actually, let's go a little bit further. So we go to May 5th, it seems. So yeah, I waited for some support. I didn't buy it anywhere crashing. I didn't buy, not even the lows I didn't buy. I waited for, we saw some upward momentum and just overall market momentum. So yes, I missed out on a few gains, not the biggest deal. And now I have this buy leap call option and it is up 57%. So although I didn't time it perfectly, 57% is really good on returns. Number 4, I kind of alluded to this before, but it's ignoring cash and flexibility. Look, cash is very underrated. Everyone thinks being fully invested is great, but when pullbacks come, you're kind of struck. You're kind of out of things to invest in. So right now I do have 4,500 just sitting, waiting for the right setup. Being liquid means I could strike when the price is right. And don't underestimate that, because that's a big mistake I made early of 2024 or early of 2025, late of 2024. I was all in. I trust in our government and just the market, and I ended up getting obliterated. So I went down pretty significantly in the first few months. I went down 10% or 20%, almost 20%. And yeah, it hurt. And at that point, I did have cash, but I didn't have as much as I wish I had. And now that's what I'm doing. I'm waiting for some kind of crash or just being ready for a crash. You can't really expect these things. And as I build my portfolio, I'm generating cash. And then eventually, if we do see an opportunity, because there will be an opportunity, I will deploy it appropriately. Now, number 5 is pretty good to my videos in the past, and that's chasing high yield dividends. I think is a pretty beginner level strategy, and you can do it pretty blindly. Look, dividends are solid, and I do love passive income. But if you are chasing those massive yields without looking at fundamentals or just overall growth, you're pretty much prepared to lose in that scenario. So you really should focus on consistency and sustainability. And I do have very small positions in ETFs, and I do collect dividends, and they pay like clockwork, and I reinvest. They're slow, steady, no stress. But I did end up selling one of my dividend paying ETFs, and that's this SCHD. And although it is a good dividend paying, I just feel I'm not in a position where I want to collect massive dividends with very little growth. This is only growing 2% a year in the past 5 years, 50%, which is good. 50% is very good, but I am looking for more of a growth. You can see here I sold it at 26.27. So I'm not really missing out on too much right now. And that doesn't mean this doesn't go up. Doesn't mean SCHD doesn't go up. But in my opinion, if this goes up pretty significantly, that means my other investments will go up a lot more, like SoFi. SoFi is a really good play that I do have, and I am holding 400 shares. I'm up 50%, not looking to take profits right now. But overall, those are the 5 mistakes. Obviously, as we get more advanced, there are more mistakes that people make, like hedging too much or just aggressively doing option plays and selling options at bad deltas and timing things pretty wrong. But that's more of the intermediate and more advanced mistakes that I do see investors make. Beginners are these kind of mistakes, these 5 mistakes. And there it is. Those are the 5 deadly mistakes that could cost you in the market. And if you've caught doing any of these, which I have personally, don't beat yourself up. Really just adapt, stay patient, and stay smart. And also, if you want to help building your strategy or just want to be in a solid community, the Discord is free and then the premium is just $8 a month. Until next time, peace.